What's up, guys? Want to do another video about ETFs. So ETFs right now, it's pretty big right now in the Canadian regulation. They have actually approved a couple of new ETFs. For example, Ethereum ETFs as well as Bitcoin ETF, right? Why is this important and how does it affect you as an investor, right? Let me just go right into it. But before that, remember to subscribe, remember to like, and join my Telegram group for more updates on news as well, right? And a couple of technical analysis. All right, so let's just go and dive into what is ETF first. So ETF is basically an exchange traded fund, ETF, right? So it's basically a security that tracks the index, sector, commodity, or other assets. So if you think about it in terms of a layman terms, it's basically a group of the stocks that actually average out in terms of their performance, right? And it is lumped together into something called an ETF, right? So it's basically an investment where you invest into a ETF, and from there you can actually track some of the returns from a basket of stocks or products, for example. So the easiest, most well-known ETF example is actually SPY here, right? Which is Spider S&P. And why people actually invest in ETF is basically because if you can think it in the more layman terms, it's basically a very good diversification type of investment strategy, whereby you just put into a ETF fund, and the fund will basically is already diversified into a lot of products, right? So you can call it like a lazy investing, right? But the returns are still not bad as well, right? And on the side, they also charge you like certain annual fees, performance fees, as well as sales charges that differentiate between different ETFs. So let me show you one of the example of the ETF performance. For example, SPY, right, S&P, that tracks the S&P in the US, the ETFs for the 500 products stocks, right? Here is just one of the example. In the last 10 years, the Spider SPY ETF obtained 13.81% compound annual return. So imagine that 13.8%, 13.81% just putting your money into this, and it's compounded annually. And I believe this is very, very good in terms of performance, right? As a whole, just by putting your money into this product itself, it's kind of like a really good thing. So for you, how does it affect the performance of Bitcoin if you say there is more ETFs that comes into play, right? So this is what happens, right? There will be a couple of winners in this side of things. Is that first, the companies that actually provide these ETF services, they will basically be earning the sales fee, the management fees, the annual fees for managing the products. And these companies will actually purchase the cryptos depending on what sort of crypto ETF it is. Let's say it's Bitcoin ETF, they will be required to purchase some Bitcoin ETF, Bitcoin to store it, right? So that they are able to provide their investors the exposure to Bitcoin in terms of the investment and the upside gains as well, right? And certain ETFs, they will be charged at a slight premium or discount from the prices, right? And things like that. So from the investor side of things, why would you buy an ETF, a Bitcoin ETF or crypto ETF, for example, right? It's because of these few things. In an ETF, basically you can trade it like something like a futures style, meaning normally the conventional stocks is you buy low, you sell high. But for ETF, you can actually short the market, which is something in the futures market only can do. So meaning you can, if you know that the market of Bitcoin is currently dropping, like right now, currently it is dropping quite heavily, right? If let's say you were to purchase a ETF of Bitcoin, and you can actually short the ETF to say that you can make money when it's going down, right? So that is something that people can do. And the other thing for the investor is that they actually save the hassle of opening an account, registering and doing the KYC, and also going through the identification process and top up. So it's more convenient for certain investors, right, to actually purchase ETFs. And for the crypto market as a whole as well, the benefit is that as more of these investment management firms purchase or get approved their ETFs, right, more and more of these companies will actually purchase the cryptos that they have in terms of the ETF, let's say Bitcoin ETF or Ethereum ETFs, for example, right? They will actually purchase more, and that will actually have a benefit for retail investors, because the more of the crypto will be taken up by these entities, and there will be less in the exchanges, which means that it will kind of push the price up, right, accordingly. And the other thing is that it will be less volatile for the market as well, because this sort of investment companies will keep the ETFs, and they will actually earn money from the annual fees, the performance fees, and things like that from the companies. So the likelihood of these companies that have their ETF approved, they will actually be less likely to sell it, although they will and can sell it as well, right? So that's one. There's a few things that is very important in terms of that, right? And this is what are the benefits in terms of the having more ETFs in the crypto market. And this is just a short tutorial about this, and I hope this has been informative for you guys. And thanks for watching, and as usual, stay tuned for my videos as well. Take care.